Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 18th, 2025, and we're diving into Scholastic's fiscal 2026 first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Scholastic, a leader in children's publishing and education, has just released their Q1 results. It's a seasonally slow quarter for them, but there are some interesting developments to discuss.
Revenue and profitability overview. Let's start with the top line. Scholastic reported revenues of $225.6 million, a 5% decrease from last year. John, what are the key factors behind this decline?
The decline in revenue is primarily due to lower sales in their Education Solutions segment, which faced a challenging funding environment. However, it's worth noting that their children's book publishing and distribution segment saw a 4% increase in revenue, which helped offset some of the losses.
And what about profitability? The operating loss increased to $92.2 million. How does this compare to expectations?
While the operating loss increased by 4%, it's important to highlight that the adjusted EPS of $2.52 was slightly better than the forecasted $2.44. This indicates some level of cost management and operational efficiency despite the challenging environment.
Strategic initiatives and segment performance. Scholastic has been focusing on strategic initiatives across its segments. Can you elaborate on the performance of these segments?
Absolutely. The children's book publishing and distribution segment performed well, with revenues up 4% to $109.4 million, driven by strong book fair bookings. However, the Education Solutions segment saw a significant 28% drop in revenue due to funding uncertainties. The entertainment segment also faced challenges, with an 18% decline in revenue, largely due to delays in production greenlights.
It seems like a mixed bag. How is Scholastic planning to address these challenges?
Scholastic is focusing on optimizing capital allocation and strengthening its balance sheet. They're exploring sale-leaseback transactions for key real estate assets, which could provide additional liquidity for strategic investments and debt reduction.
CEO insights and future outlook. Peter Warwick, Scholastic CEO, provided some insights into their strategic direction. What are the key takeaways from his statements?
Peter Warwick emphasized the company's progress in advancing strategic initiatives, particularly in integrating their children's book group and expanding their digital and licensing revenue streams. He also highlighted the encouraging fall book fair bookings and the launch of their Scholastic-branded streaming app. Importantly, Scholastic has affirmed its fiscal 2026 guidance, showing confidence in their long-term growth strategy.
It sounds like they're positioning themselves well for the future. What should investors keep an eye on?
Investors should watch how Scholastic navigates the funding challenges in the Education Solutions segment and the potential impact of their real estate monetization efforts. Their ability to leverage their IP and expand digital offerings will be crucial for sustained growth.